Oh, welcome back to the exchange. Stifel Financial reporting a big earnings beat today. Net revenues hitting a record for the 25th year in a row, but the stock is down slightly today, perhaps getting caught up in the rest of the market contagion. Still, it's been a good run. Stifel up 56% in the past 6 months. Joining us now with a first on CNBC interview is Ron Kruzewski, CEO of Stifel Financial. And yet, investment banking revenues up 18%. Almost every division posting better than expected results. Everybody seems to love the quarter. The stock is down, though, Ron. What are you just getting caught up in all the market contagion today?
Yeah, I think so. I mean, we had a great quarter. Importantly, our outlook for 2021 is every bit as optimistic. So, look, at the markets are going to do what the markets are going to do. I'm very pleased with our results. You said it, 25 consecutive years of record revenue. Not very many investment banks can say that. And we just had a great quarter, records across the board. So great and optimistic.
Talk to us. You have a retail brokerage, so talk to us about what you are and your team is seeing, Ron. Is this sort of Reddit rebellion or whatever you want to call it this week? It's really centered around 20 stocks. GameStop getting the most attention, but it's a small number of stocks, generally with low float, high short interest. Are you seeing any knock-on effects to other equities because of this?
I think that, sure. I mean, there's a lot of interest by investors and so-called retail investors. But I think this thing that's going on, the real question is, what are we telling our clients? And there's a lot of, as if this is a new phenomenon. Short squeezes have been going on for over 100 years. It happened in railroads. And what I find, what people aren't talking about is that, when this happens, the stock will go to a level, in this case, GameStop, $300 to $400. That's not sustainable. That is the clearing mechanism for shorts to get out. And once that's done, this stock will revert back to where it was. And so we're talking about how much the hedge funds are losing, and they're losing a lot. But there are a lot of longs that are going to lose a lot of money when this trade unwinds. And I think that's where I'm a little concerned that people do not understand the risk of playing in what is effectively a casino.
Well, I mean, Ron, how do you know that a financially distressed, mall-based, brick-and-mortar video game company that is widely hated by every analyst on the street isn't worth $21 billion?
Okay, I will say that, as Warren Buffett said at one time, the stock market is a voting machine for a long time, and so the votes are coming in, but eventually it turns into a weighing machine. And unless they completely change their model or do something, that stock's not worth $21 billion. I pretty well confidently can say that. Now, maybe they bought some land and there's some huge I can't say oil reserves because that may not be worth anything, but they're sitting on some gold mine, and so the value will be there. But I don't think there's anyone that believes that this company is worth $21 to $25 billion. It is a phenomenon of a short squeeze, and there are people coming into this game that have no idea the risks that they're taking, and there is going to be that, and that speaks nothing about what's going on in the options market. I mean, I think there's 9 million shares that settled today in the options market on calls that people have paid, and there's big premiums being paid. All I'm saying to you, Brian, is that when the book is written on this trade, it isn't going to be just the shorts that got hammered. There are going to be a lot of longs that are going to lose a lot of money.
Yeah. Do you think it calls into question Robinhood's business model?
No, I think that one of the things is that I think people should understand is that the same reason that the shorts have to cover their positions is because they have margin requirements, and so the old adage that a short, the market can be irrational longer than you can be liquid applies to the shorts in this case. But I think in Robinhood, in these cases, to the extent that you're doing a lot of trades on the long side, your margin requirements are going up significantly. and because the market requires that we keep some stability. So they've got huge margin requirements to continue to trade. I do think that one of the things that will come out of this, and some of my friends are going to be mad at me for saying this, payment for order flow is going to get a lot of focus here, because these trades are not free. They're not. Every one of these trades, there's a transfer of value, and I think that is going to come under the microscope.
Well, maybe it should. Listen, if something is free, you are the product. By the way, we got to leave it there. But I got a text from one of your investors who said investment banking rocked this quarter. A direct text. So Ron Kruzewski, thank you very much for joining us. Stifel, big quarter there.
Good to see you. Have a great day. Okay.
Yep. Thank you. You too, Ron. Appreciate that. Best to you and your team.